we've got Mr. K. Harihar of FirstRand Bank, who's joining us right now to take this conversation forward. Hari, thanks very much for taking out the time. Obviously, this being a knee-jerk reaction to the exit polls, but what, according to you, is the fair value right now for the currency? 69.55 is where we are at right now, but is this likely to stick?
I think even in the morning, it was very clear that the sentiment had turned so positive that levels above 70 could not sustain. So I think the rupee strengthening was a very fair kind of directional move. But levels below 69.50 may not be very sustainable. And as we indeed saw that the rupee did go to 69.36 odd levels and then bounce back from there. And that is purely because of the fact that you have global factors which are still very much in play, whether it's oil bubbling at $73 on the Brent, whether it's a tension between Saudi Arabia and Iran, whether it's the US-China trade war, which is still not come to any firm resolution. I think these are all factors that are going to be affecting the rupee in a negative fashion. Also, the fact that the trade deficit had moved up to $15 billion last month, I think that's again a reality. While part of it was explained by the fact that gold imports surged up, the bigger fact remains that the exports have actually taken a beating thanks to a global slowdown. So all these factors will confluence and make the rupee a bit hesitant to strengthen beyond 69.50, where you'll see import demand happening. Now, will it strengthen beyond 69.50 will be contingent on just one main factor. FPIs have been absent from the Indian market for the last 2 months. So if they come back after the election results are announced, then I think 69.50 can be tested and we can see stronger levels for the rupee. Otherwise, 69.50, 70.25 should be a fair range.
What about the fair value as projected by REIR of about 72 to the dollar? What happens to that?
Hello.
Hari, can you hear me?
Yeah, I can.
Yeah, I was asking you, as per REIR, the fair value is projected somewhere closer to 72 to the dollar. Do you see that changing in the base coming off?
It's a statistical calculation, and therefore, you will come to a rupee value. But rupee value traditionally in India has been determined by the sentiment and by the flows. So if you see large flows coming in from FPIs, then you'll see the rupee strengthening, which is what you saw a few weeks back when large amounts came in from FPIs. But as soon as that kind of backs off or oil goes up, you'll see the rupee weakening. So eventually, rupee will go towards its fair value, but in the short term, it's going to be determined purely by the flows. And if it goes below 69.50, my sense is also the central bank would keep adding to the dollar stock that it has. And imported demand also should be coming in. And on the other hand, 70 plus levels are very good levels for exporters to sell because the forward premiums are looking high and are slightly above the normal levels. So those are good levels for exporters to go sell the receivables.
Which is going to be my next question, actually, and my final question on whether or not the currency strength right now is the opportune time for the RBI to shore up its forex reserves.
I think it is indeed a right time because, dollars should be bought only when they're coming in. So while, as I mentioned earlier, you didn't have the FPIs coming in the last couple of months, we did see the FIs being very, very active in February and March, and I think that's when the RBI was also busy buying the dollars. You could also see some one-timers coming in if the steel settlement happens for the big settlement that was decided, but we're just still waiting for the final green from the courts. So if that comes in and $6-7 billion comes in, surely those are nice levels to buy the dollars, not just to jack up the FX reserves, but also when the RBI buys the dollars, it gives away rupees, and those rupees are very much needed in a system which is running short of INR liquidity. As of yesterday, the market is short about 40,000 crores of liquidity. So when the RBI buys the dollars, it gives much needed liquidity, which could also cool off the interest rate. So I think it's a nice time to buy dollars should they come.